Good morning, Facebook. I'm Kyle Olson with Keller Williams Inspire Realty, and welcome to another fantastic live at lunch here with Lindsey from TCF Bank. Oh, excuse me. We got a little bit of a. Thought I muted that.
Well, I'm Lindsey Svir, and we are now with TCF Bank. Our division is called TCF Home Loans, so I am still a mortgage advisor over there, right next door to Keller Williams. In case you work with Kyle, you can pop on over and visit us anytime.
Absolutely. So we appreciate you being here. We're going to talk today a bit about what's going on in the market. As we're hitting the spring market, a lot of people have been wondering kind of what does the market look like? How does it change from last year? And what kind of things can we be expecting this spring as it really starts to heat up? Hopefully outside because it's still pretty cold. So again, we wanted to sit here and chat about that. So bring your questions if you have any. We'll be watching those as well for you. So you can stump me. We'll give you or Lindsey on something about the market.
Yeah.
We'll give you some ice cream. Yeah, maybe we might give you some ice cream if you bring questions. So hey, bring
or
those
coffee
questions.
Or hot cocoa,
coffee.
Maybe.
Ooh.
You need to warm up.
There we go.
Soup?
Exactly. You
TBD.
doing soup? What kind of soup are we doing?
I don't know. We can do something. We'll figure something out. We really want to do this to have it be beneficial to you, the consumer. So if you have questions, please feel free to interact. The more interaction there is, the easier it is for us to just not word vomit all over Facebook.
Yes, well, that's always fun. But
I know. We can do that anyway. We can fill the air.
we can definitely fill
worries
the air.
there.
Have fun.
Perfect. So
let's just jump into it.
Yeah, I'm up first.
Woohoo.
Basically, before I get into it too much, I just kind of want to give a disclaimer that I am not I'm not a market advisor. I'm really just trying to give a very grand view of the market. If you have specific questions, definitely reach out to myself or your local lender. But I'm not necessarily extending credit to anybody through these terms. These are just made up numbers, not an extension of credit.
But come on in and chat with her because then we'll get you credit. And she does fantastic with all of my clients. I love working with Lindsey.
Perfect.
It's just always perfect. She's so great with them.
Most of the time it is. We try and make it as smooth as possible. We try and make the mountains into molehills.
Yes,
right?
exactly.
So basically, the first thing that I want to talk about is kind of the trend of the market. So I'm going to pull up, I've got a really cool rate app here. And so I think you can kind of see it behind you or behind us. With the market and with interest rates, there's an inverse relationship. So as the market goes down, typically speaking, interest rates go up. So when we talk about, the market's down, and that being a bad thing, it's because that generally means there's a rise in interest rates. So this snapshot is a general decline over the last 3 months or so. You can see we've kind of hit what we would refer to as like a floor for the time being, where over here, we're kind of just bobbling now. The trend does seem that we've leveled off a little bit, which is good because over the last month it was really tough to have people call on a Monday and then on a Friday rates were up again and they're up again and they're up again. At least we've kind of reached a plateau
It's very
for
helpful.
the time being, and hopefully that stays the same for at least a little while here. But
what did last week look like? Did they start high and move around?
No, we had a little bit of an improvement overall last week, but you can kind of see it's really hard to tell when you're looking at the big picture, but there's just kind of a little bobble. So those are going to be day to day. And that's the thing is sometimes if somebody calls in the morning and I quote them an interest rate, it can be a different rate in the afternoon. Sometimes we can get 2, 3, 4 repricings within a single day, depending on what the market news is.
That is
so,
amazing.
So if you are shopping, a good tip then is to make sure that you do call a couple of people within a really close time frame, so that you're getting a real apples to apples comparison on rates. Because if you call one in the morning and one at night, you might still not be using the same rate sheet.
And I will be the first one to tell you that it's more about person you're working with than it is the rate as well. So no matter what that rate is, you still have to have a very good relationship with a fantastic lender like Lindsey.
Well, and a lot of times people look at the rate as like they want the sexiest rate, and that might not fit in with what the plan is. If you're only going to be in the house for a couple years, it might make sense to
Oh,
take
absolutely.
a higher interest rate and have less at closing. So we really like to take an advisory approach on that and sit down with you and ask you, what are your goals of home ownership? How long do you think you'll be in this house? Is this a 3-year home, a 10-year home? And you might not know that day one, but a lot of times when you get to the closing table or somewhere in between, you're saying, you know what, I don't think we're going to be in the house for a few years.
Mm-hmm.
That makes a difference in what rate I would advise you to take, depending on kind of your goals and everything, because we want to make sure that we're leveraging your dollars to work for you as much as possible.
And that rate doesn't usually follow with you for the next house. So if you're
Right.
selling that house in this first 3 to 5 years,
Mm-hmm.
if you have another half a point and you're saving money now, it's going to be beneficial in the long run. So that's where it's really important to find a great advisor who's able to walk through these steps.
Yeah, and I did want to give just a really quick kind of comparison, and we'll maybe try and post something a little prettier to give you a real world idea of what rising interest rates mean.
That's always very helpful.
Yeah, so again, this is not rates per se. This is just kind of a scenarios of a $200,000 loan amount at different price or at different interest rates to give you an idea of what it means to your monthly payment. So in basic terms, if we're looking at a $200,000 loan amount, the principal and interest on the loan at 5% would be about $1,020. Whereas at 4% interest rate, it would be $921. So you're looking at about $100 a month difference in your payment. And a lot of times when we look at qualifying people for a home, we're looking at what payment do they qualify for, not necessarily what purchase price do they qualify for. Because with specials and all that, it can change. So to split the difference there, then, you're looking at about $50 a month for 5% versus 4.5%. So I'd say generally speaking right now, we're more in the 4.5-ish area. But the trend, of course, is that they are going up. So it is good to keep in mind that the sooner you buy, the better. In a rising interest rate environment, it does create a little bit of urgency in that, just so that you can try and get in before they reach 5.
That's always helpful. And then
we
talked a little bit about what if you would have, had this magic crystal ball and you were to buy it last fall, where the interest rates were down at 4, how much would they have saved?
Yeah, so 4 would have been right around $920 versus 4.5, $978.
So you would have saved in this scenario $60. So, me, I like to save money, and that's $60 a month. And man, I could think of a lot better uses than paying some interest. So
exactly.
Let's try and if you guys are looking to get into a house, now is a great time. As we were talking about, is now a good time to move? I think as far as interest rates, now is a good time.
Yeah, for sure.
And we were talking a little bit about historically. Like we think even though we're going up to 5%, that seems scary. But you've got a little historical numbers here.
So I just pulled up, and again, we'll post the link to where I got the information, but I pulled up kind of average interest rates. In 2007, the average rate was 6.34%, and so that was only about 10 years ago.
And it was 6, so we're still way below that.
In 97, the average rate was 7.6%.
You know what's crazy about that number is that's where a lot of the people, my age, who are starting to buy a house now, they were graduating high school. So it's really kind of cool to see. I mean, you were graduating high school at that age, and your rate was at 7.6%, and now it's down to even 4.5. I mean, you're still a ton better than where you might have thought you were. And again, that crystal ball, we never know what's going to be in the future.
Yeah, so it's just to kind of put it in perspective. And in 1987, average rate was...
in high school?
87? Yeah, no. I was about 2.
Yeah, I know.
But in 1987, the average rate was 10.21. So you got to kind of look at the big picture. Yeah, 5% sounds like a really big number when we just look at the last few years. But in the grand scheme of things, rates are still really low. So don't feel bad about being in the market in a rising interest rate environment, because we're still good.
Exactly. And if we can save you a couple $100 by getting you in this interest rate now versus maybe next spring, if it does go up, even better, right? So if you're out there looking, let's take a look at those rates right now for you.
So
next,
I think
we were going to talk a bit about, and I'll discuss some technology here for us here. We were talking a bit about what the housing market looks like currently. And so,
Kyle's got some really great information to share, just kind of about what's going on. We've got a really healthy market here still. So.
Very healthy market right now.
Let's see if it'll pop up.
It's popping up here. The technology always is, it's always a step in the right direction and sometimes two
there we
steps
go.
back. So as we're looking here, see if I can get this any bigger here. Oh, I guess that's going to be what we get. But what you can see here is that we've seen a number of listings. Last September was way up at 1,600. We are dropping down on the listings, and so the market is actually picking up. We're selling these houses. You look at, this is called the absorption rate. This means how long it's going to take to sell the amount of houses that are currently on the market before we run out if we don't have any more listed. So as you see, that's coming down, and we're seeing that we're selling them faster. So it's not that we're not selling them, but they're actually selling faster, which is fantastic as well.
So that means there's a lot of buyers.
That means there's a lot of buyers.
And we need more inventory?
We could use some more inventory. Absolutely need some more inventory. I mean, like we said, we're up to 1,600, and we're down right now just over about 1,000 right in there. So as the market's coming down, and as we saw last year in this spring, we were about 200 houses more. So if you're looking to sell, it's a fantastic time to look at that, and I'll show you a few numbers here that are going to make that seem even better, because a lot of people have been talking about this last year, how that higher end house has not been selling.
Mm-hmm.
This is a fantastic thing to see here as we go down and we look at what the sold listings we've had right here in the 350 to 450 range. Last year, we sold 3 houses in that range. This year, and this in February, 13 houses in that range have sold. So those houses, a lot of people are using those houses as maybe the step up from your first house. So you're selling your first house, moving to that house. We need a lot more in the first houses, maybe in that 150 to 250 range. Last month, we had 44, 150 range, 200 range, 18. Very good, strong numbers in those areas as well. And so as we're seeing these numbers selling and we're seeing those numbers moving up, we're seeing people moving into those houses that are, that next step as your family is growing. So if you're feeling a little cramped, or you're looking for, that extra bedroom, because maybe you had a new baby, or, right, Lindsay, maybe Lindsay's thinking about that. Uh-huh.
It's on the radar.
It's on the radar, right? That happens. And then, as maybe somebody's gone off to college, maybe you're looking to downsize a little bit, or maybe you need to get rid of those steps. Those are those fantastic times to look at these different ones that are available for you. We can go down and look at, as well, the new listings and what's coming out exactly, or in the active listings here. My computer wants to behave here. In the active listings, we are seeing as well a big jump in that 200 range. So the new ones this last month, 232 new houses in the 200,000 range, and they are selling very well. So I had one this last month that I've just launched my new home trailer. So check out my website. I've got fantastic videos that I do on those houses. A client was not thinking he was going to sell very quickly. In the January market, he had been on the market already for, what was it? I think it was a couple months, and I didn't have any luck on it. In 23 days, we had an accepted offer on that house. And I think due to the fact that we were really pushing strong on social media and bringing this fantastic video out there. So if you haven't seen the video, check that out on my Facebook page or on my webpage, which is KyleOlsonRealtor.com.
That is one thing Kyle does really well. One of the many.
Hey,
he is technology savvy. So I absolutely love when I see how far he goes for his clients as far as advertising and getting out there and finding the videos are amazing and really finding new avenues to be able to get exposure for his clients too. So.
And I like to do it in my fun time too. Did you see that fantastic hockey one that I did?
Yes.
Oh, that was a lot of fun. Those kids are so much fun out there. Check out, that's on my personal Facebook page. If you want to see it, let me know. It's also on my YouTube channel. So search for Kyle Olson Realtor on Google, and you'll find my YouTube channel as well, where you can see some of those property trailers, some of those videos of my family, or my kids out skating, which was so much fun. Yeah, like I said, that's included with all my listings, so it's not hard. One thing I wanted to ask for you guys, if you're watching this, put a message in there. Do you like these being up here, or would you rather have them full screen on the screen there? Is that something that would be helpful for you to see more of the numbers? So if you're having some issues reading it, or you're not getting what you're looking for, let us know. We can always add that to the next one. I kind of like this because it's kind of nice to be able to identify it, but maybe we need to look at something different.
Yeah, I think it's good with the charts. It might be a little tough to read when it gets to the smaller numbers.
Exactly. So if you guys are having problems reading it, let me know. Anything we can do to help you guys, that's what we're here for. We're trying to help educate the market in whatever way it is, whether you're working with us or another great realtor, or even another great lender. They do happen, and it's all that personal connection, and that's what we're trying to create for you guys, this connection. If there's anything we can do to help you guys out, do you have anything more to say? Oh, you have that fantastic app.
Yeah, I wanted to share one more really great tool that I personally use. I use to run the numbers that I just shared with you guys a little bit ago. Kyle uses it. I have a lot of clients that use it. It's a really great tool. Shout out to my girlfriend Missy.
We're gonna put that up on the screen here.
Yeah,
for you. Let's put it up.
She is my most frequent user of said app. So if she, I might have to tag her in here.
I'm gonna call out a couple people. We've got Royce watching us and Aaron watching us. Thank you guys for joining us. If you have any questions here, I greatly appreciate you guys spending your time. I know it's lunchtime, but it's always here to help educate you guys if there's any questions. Remember, questions equal ice cream or coffee.
Or coffee. Or
so
soup.
here's your fantastic app.
Yeah, so here's a screenshot of it. I'm just pulling this up on my phone, so this is exactly what it would look like if you downloaded it. And to get a copy of it or to have me share it, all you have to do is shoot us a message, and then I can contact you personally to get your cell phone number. So it comes over as a text, and then you can download it on your app, or on your phone as an app.
On your phone, exactly.
Mm-hmm. So it's really easy. So the nice part about it is that you can see on the homepage, like there's ways to contact us. There's also a link directly to the loan application. So for agents that use it, sometimes I know that they'll use the link on there to share it with their clients to say, hey, just click this link. You can start the pre-approval process or the pre-qualification process, and it's really easy and friendly. If you go to the bottom, there's a calculator, and then you can go in and do a refinance, an affordability, or a purchase calculator. Most people will do the purchase calculator. I know that's a little hard to see, but it does have conventional FHA, VA, and USDA options on there.
And it's very easy to use.
Yeah, and so if you know what type of loan you've been pre-qualified for, then you can set it up specifically for that. So if you run a scenario, it'll ask you for the down payment. It does ask you for an interest rate. Most of the time, your lender should be able to give you kind of a range of where the rates are looking when you get pre-qualified. The loan term, so if you want to do a 20 or a 15 and price that out in comparison, you can do that. Property taxes and homeowners insurance are annual installments, but you want to put those in there, and they'll calculate out too so that it is included in your monthly payment. Same thing with mortgage insurance. So if you're doing a conventional loan with less than 20% down, it'll even calculate in an estimate for mortgage insurance, which is pretty cool because a lot of calculators don't necessarily include that.
And don't forget, we've also got to put specials in there, right? So we drop specials in on the taxes. The taxes line.
So the taxes installment plus the specials installment.
It's that fun thing about the North Dakota, Minnesota area. We got these fun specials, and
they're unique to us, so the app doesn't have a line item for specials, unfortunately. But the nice part is then it shows you, it gives you a little chart and a little breakdown of, in this scenario I ran, it shows like the principal and interest, homeowners insurance, estimated mortgage insurance, and then property taxes and specials if applicable. And it makes it really nice. So then you can compare. So if you're looking at, well, what does it mean if I do 5% versus 10%? Or, it makes it pretty handy for those people that like to do it on their own.
Absolutely. And as you're out driving around, you can download my app and you can find those houses as you're driving around. It's GPS enabled. We'll show that in another video here, but those apps help you guys be able to hit that market if you're with us or when you're out just thinking, just brainstorming, hit those numbers, try them out yourself, and then when you really want an actual thing, give us a call. We'll be here to help in any way we can.
I think we both try and do a pretty good job of being agile. So if you want to meet in person, let's meet in person, over the phone, through technology, whatever. We work for the clients, so.
We can even Skype you in from California if you're moving here.
There you go. There you go.
Although I don't know why you'd want to move from California. It's pretty nice down there right now, I think.
Probably a little warmer.
It's a little chilly out here today, but anyways, I think that's all we have.
Yeah.
And we appreciate you guys joining us. Again, I'm Kyle Olson with Keller Williams, Inspire Realty. Go ahead, check out the YouTube channel. We've got all the other videos out there for you guys of the Keller Williams and Lindsey with both of her companies. Same company, just changed names. So she's got in there a little bit of Rubicon, a little bit of TCF, but they're all on there being able to help you guys out. She does a fantastic job at TCF now, and we're glad to have them as partners. So check out that YouTube channel, and if you have any questions, feel free to reach out to us. Thanks, and have a fantastic day.
Bye.